Goldman's have their note out this morning, so let's see what you make of this. They said this: short-lived pauses in trade tensions have in the past been a way to renewed escalation rather than rolling back the trade war. If anything, disagreements have spread. Finding ramps off to de-escalate is harder. They actually still think you're in for a little bit of a bumpy ride and a lower yuan to 7, well, they say 720 within the next 3 to 6 months. Bumpy ride, or do you think it's a durable agreement? What do you make of the past 48 hours?
Well, I know, Zach, and so it's hard not to disagree with that. I mean, in the past, we've seen similar stories like this. Let's go back to November last year. We had the big sell-off in the S&P in October. You may remember that, because Trump started escalating tariffs, and then he suddenly did a mini peace deal. Where here we are again, we're having a mini peace deal where the details aren't clear, nothing's been set in stone, and the Chinese media is not even reporting it, is what I just learned in that last segment. So that makes everybody a little bit less optimistic on the news of that, and you should think about what's going to happen ahead. So yes, we've had a mini peace deal, so therefore the renminbi should strengthen. Yes, we've had delays to those tariffs. When it comes to the October 15 ones, we're not having the increase to those tariffs. However, the December tariffs are still going ahead. So therefore, if we see nothing and the December tariffs go ahead, all this optimism will be short-lived. So I think, for me, take the trade war out of that story, because that's the volatile stuff, which I can't predict on a daily basis all the time. The other thing is much more predictable is the macro story in China. Things are slowing down, so they do need a weaker currency. What about the global story? Things are slowing down, so therefore you should see a stronger dollar. So short term, we have actually gone long the renminbi, just a very short-term trade. But when it comes to the longer-term, medium-term story, all those issues still remain. And I think I agree with that previous note you just reported on, that it's more likely that eventually dollar China goes back up again.
Look, you talk at Nomura about certain trades that you'd want to chase, risk-on trades in certain scenarios. And one of them, of course, would be if we got a trade deal. This is only partial. We have seen a bit of a rally in risk assets. Other than the renminbi, are there any parts of this risk rally that you would want to chase, at least for the short term?
I mean, I've tried buying Scandinavian currencies because they're extreme valuation. So at this stage of the cycle, it's still very hard to see what that big positive story will be. But there's value trades. So currencies that are very far from the valuations, such as Norway, such as Sweden, keep an eye out for those. When the European story improves, those are the longs I'd like to be doing.
What about volatility? I was just having a look at this. Yuan volatility is one of those things that we saw spike just ahead of the talk. So have a look at this. It's in the GTV library. That's come back. Do you play this through pure crosses, or do you look at volatility as a mechanism for, let's say, picking up tougher times ahead on the yuan?
I would stick to your core trade, which is the trade story has implications for other countries. It has implications for developed markets, not just emerging markets. But if you have a strong China trade view, you should definitely just do it in renminbi, because that's where you're going to get bang for buck. And that's where the vol is.
What about euro-dollar then? What's your target there?
So we're looking for 108, and we've had this little mini upswing thanks to the trade wars. But I think actually, of all the two economies that need a weaker currency between the Eurozone and the US, the Eurozone still needs a weaker currency to help it out. Growth is pretty poor. The data continues to get worse. There are positives, which is perhaps the ECB's monetary easing package. Maybe that provides a boost to the data going forward. If that happens, maybe I'm wrong. But I don't think so, because the efficacy of QE at the zero lower band is getting very, very limited. So 108 is my initial target. 105 is if we do talk about recession risks next year. We're not there yet, but it's building up to that story.